Happy Friday out there, folks. It's Darius Dale here to present our macro minute for Friday, January 7th, 2022. Starting with markets, we have stocks mix this morning, commodities up, crypto down, dollar down small, global bond yields up. Big movers today. It's in the crypto space. Bitcoin down 2%, Ethereum down another 6% in a tough week for crypto. On the economic front, yesterday's December ISM Services PMI data were confirming of two themes that we've been discussing all week. Number one, slowing growth, and number two, past peak supply chain disruptions. So the headline came in at 62. That's the lowest number we've seen in 3 months. New orders came in at 61.5. That's the lowest print we've seen since February of 2021. Employment at 54.9. That's the lowest print in 2 months. The percentage of respondents reporting slower supplier delivery times crashed effectively to 36.4. That's the lowest print we've seen since March of 2021. And the 16.2% month over month decline was the sharpest decline we've seen since May of 2020. So a real amelioration of the supply chain concerns in the services sector of the U.S. economy. And then we saw that as well with the backlog of orders ticking down to 62.3. That's the lowest we've seen since September 21. So obviously not still very peak in terms of supply chain disruptions, but we're certainly moving well past the crest of that. The ISM Services Prices Subindex teamed up with yesterday's preliminary inflation data, or teamed up with today's preliminary inflation data out of the Eurozone to deliver a subtle reminder that elevated rates of inflation will have a sticky tail to them here in the US. So the ISM Prices Index ticked up to 82.5. That's the highest print in a couple months. Eurozone headline CPI ticked up another 10 basis points to an all-time high of 5% year over year. And the core CPI came in unchanged at an all-time high of 2.6% year over year. These are December prints. With respect to today's probable range setups, look into our global macro risk matrix, 10-year Bund yield, 10-year JGB yield, 10-year Swiss yield, 10-year gilt yield, 10-year two-year Treasury yield, 10-year Treasury yield, and the 10-year TIPS yield are all still at the upper boundaries of their probable range. You may see some sideways corrections over the next week or so, but oversold signals in the NASDAQ 100 and the Shanghai Composite. Mixing up a little bit here is when I actually would like some feedback on this. I'm going to actually give the price levels for the probable ranges. Maybe that makes a little bit more sense. Maybe it makes this a little bit more actionable. So please provide some feedback and let me know if you prefer this. So S&P 500, 46.70 on the downside, 48.84 on the upside. That's still bullish VAMs. WTI broke to neutral VAMs today, 71 on the downside versus 80 on the upside. Bloomberg Dollar Index, that broke to neutral VAMs earlier in the week, 1170 on the downside versus 1189 on the upside. 10-year Treasury yield, bullish VAMs, 150 on one spot 50 on the downside, one spot 72 on the upside. Bitcoin bearish VAMs still breaking to new lows this morning, 41,000 on the downside, 49,000 on the upside. I'm not going to give you pinpoint estimates on Bitcoin probable range. We'll round it to the nearest thousand. And then lastly, Ethereum will round it to the nearest 100. So 3,200 on the downside versus 4,000 on the upside. And then gold 1771 on the downside versus 1839 on the upside. So let me know if you prefer the actual price levels, or we can go back to doing the percentage change calculations as well. So with that, everyone have a wonderful weekend. We'll catch you back here on Monday. Cheers.